Hello and welcome to another information-packed episode of the Biz Coach Show. And today, as always, we are hanging out with Eric T. Whitmoyer. He is the founder and CEO of My Biz Coaches. And Eric, how are you doing today?
Doing awesome, David, and yourself?
Hey, I'm doing pretty good, man. Pretty good. Always good to be hanging out with you. And continuing on, actually, from our last episode, we're talking about business credit. So if you haven't already checked out the previous episode, go back. It's a good introduction to business credit, where there's some myth busting and some kind of basic understanding that you'll get from that around business credit. And then we're going to take that one step further today and look at differences between business credit and corporate credit. And so, Eric, I'll turn it over to you to kind of walk us through some of those key differentiations.
Yeah, so let me start with this kind of an overarching theme in regards to business credit versus corporate credit is understanding the concept that business credit is more associated with small businesses or solopreneurships, sole proprietorships, I should say, and the credit is tied to the owner's personal credit profile. So to clearly identify that, when you get a business credit account, whatever that might be, let's just say it's a Visa card from whatever bank, could be an Amex as well. But if you get business credit, it will be established using your personal FICO score. So they use your personal credit score to establish a line of credit for you. Now, you might ask, well, then if that's the case, then how's that different than just having it in my own personal credit? Well, the difference with business credit is once this account is established, it is associated with an LLC, and it does use, LLC. It could be any corporate formation, so it could be LLC, C corp, S corp, whatever. But though it uses your personal credit to establish a line of credit, what it does not do is it does not report on your personal credit score. Meaning, if you get qualified for, let's say, $25,000 in business credit that you then use, let's say 10, 15, 20,000 of that 25,000 for your business to help grow and scale and do whatever you need to do, it will not reflect on your FICO score. So if you had a good personal credit score of, let's say, 720, for instance, that will not be impacted by the business credit unless you default. That is one caveat. If you default, then it will come back on you. So you need to make sure that you understand that the purpose of the business credit is really to allow you the ability to use business credit, use the credit that you establish for the business to do the different things you would do for your business without directly impacting your personal credit score. Again, if you default on it, it'll still come back on you. You'd be personally responsible for it. It'll probably even be tied to some of your personal assets. But the point of the matter is that you can actually leverage it. And one of the things we talked about last week was that business credit is uniquely different because whether it's business credit or corporate credit, when you use it, it does not necessarily work negatively against your score. And so it's important to understand that as well, because that will help you identify and recognize how you should effectively use the credit. So it doesn't mean you should use it frivolously, just means that it doesn't directly impact your personal credit score. And that's really a unique difference to understand. Whereas corporate credits are clearly identify, usually more associated with C corps and S corps, but corporate credit is formed is established by the actual legal entity of a corporation or an LLC using an EIN number, which we'll talk a little bit more about that in another show. But it uses the EIN number to establish it. There's a lot of different factors you want to make sure you do correctly, and it will take some time to establish that credit, whereas business credit can usually be established within a few weeks because, again, it's using your personal credit. Whereas corporate credit, you're over an extended period of time ensuring that you're reporting to the right bureaus, that you're getting credit for that reporting, and that you're paying whatever you're borrowing, you're paying it back, you're showing your payment schedule, and then that reporting is being reflected with the different appropriate business credit bureaus so that you get the corporate credit that you want to establish. So very unique difference there, because at that point, it is completely independent of personal credit and allows you to begin to go down a path where you may not have to sign any personal guarantees or things like that. Now, that really won't happen right out of the gate, and this is more of an educational process, but it's helped you understand the distinction between the two.
Awesome. Well, that's a good overview. Any other kind of key differences that you want to highlight for people that are maybe unfamiliar with these two types of credit?
Yeah, so the credit reporting agencies with business credit often are reported to your credit bureaus like Dun and Bradstreet, Experian, and Experian and Equifax Business. Their reports focus on the credit worthiness of the business entity. With corporate credit, they report to the same credit bureaus, but in that particular case, they're reviewed by the rating agencies like Standard & Poor's, Moody's, and Fitch Ratings. So slightly different, right? And you notice that the Experian business and the Equifax business, those are more closely related to the personal scores that we find in the FICOs, right? Whereas these other companies, Moody's and Fitch and Standard & Poor's, those are different. Those are definitely more of a larger corporation, typically, and that we associate anyway with larger corporations. They provide a more comprehensive assessment of a corporation's financial health and risk profile.
Okay, so reporting agencies, another big difference. Any other kind of big things or differences that people should be aware of?
Yeah. So, and again, I said it already, but I'll restate it. It's really important to understand that utilization and access are substantially different with business and corporate credit versus personal credit. In personal credit, we are constantly reminded how much debt you take on will lower your score. And the more that you take on, particularly in a certain amount of time, it will dramatically reduce your score and then it'll slowly come up. But as long as you have a large outstanding balance, typically that will weigh on your score fairly heavily on a personal side. In the business and corporate space, that is not the same scenario. Now, it obviously limits the ability to get more credit, or can limit the ability to get more credit, but it doesn't necessarily pull your score down. And if you're consistently showing payments on your credit, at your outstanding balance of the credit you have on whether it's business or corporate credit, it will begin to it reflect that you're making all your payments as agreed, and consequently, you will likely have vendors reaching out to you if you can show the financials that support it. Particularly as you move into corporate credit, they will look at that and say, wow, you're doing well, you're showing that your business is growing, you're being responsible, you're making payments on time, we're actually going to extend you even more credit. Even though you might be at 70% utilization, they may very well begin to issue even more credit to you because they see that you're paying, your business is growing, and you're leveraging the credit correctly, as opposed to just going out there and buying a bunch of stuff for no good reason.
Yeah, absolutely. Well, as you're talking about that, Eric, I do want to talk briefly about something, which is some of the partnerships that you have. So I think we talked last week. You have a new partnership with Jay Galt, which specializes in business financing. But then there's something that we didn't talk about last week that I kind of want to inject into the conversation, which is my biz coaches. They have all these partnerships. So if you're a business coach or a professional that serves businesses and you're looking for ways to, better serve your clients, or maybe add different, revenue streams to what you're currently doing, Eric and his team over at my biz coaches have all these partnerships. And so there's one that you have called Fund and Grow. And as you're kind of talking about how to get started with this, is maybe that a good partnership opportunity for people to look into?
Yeah. So if in the progressional conversation of establishing corporate credit, what we highly recommend people start with is to move into a relationship with a company like Fund and Grow. That is the one that we highly recommend. And that relationship with Fund and Grow, you pay an upfront fee, and they will, on your behalf, help negotiate with the credit companies, the companies that are establishing credit for you in a LLC or an S corp, but whatever you have entity you've established, but they will, on your behalf, negotiate with these banks, and they're using your personal credit score. So the higher your personal credit score is, the more likely you're going to get some really good credit. And they have additional programs as well at Fund and Grow, like they do. If your credit's not good, they can show you how to improve your credit. They also do have some education that teaches you how to move from a business credit into corporate credit, which again takes a longer period of time. But that business credit, as I mentioned, it's kind of a hybrid. All right. So if you've got good personal credit, I would encourage you, that would be a good recommendation to move into business credit, because now you can leverage that without impacting your personal credit score, and use it to help build your business. And then once you get to a certain point that your corporate credit is established in an effective way, you can now go back and refinance that debt that you accumulated under the business credit if you haven't already paid it off. But it's a great way to make that transition to move from, getting started to having some access to credit. It's a lot of companies that we run into. Think of the service types of service-based businesses that we work with, those landscapers and plumbers and HVAC and those types of businesses, right? They have costs that they're incurring, payroll, vehicle leases or purchase prices, or they have diesel, right? Their fuel of some sort that they're paying for. They have all these different things that they're paying for. And if they want to be able to have the employees be able to purchase that, you don't want to do that with a debit card.
Right.
You want to do you want to do it with a credit card. So get your business credit established, and then you can issue some cards to these employees, and they can use that out in the field, and they can use it instead of having to reimburse expenses. They can use the business credit card, and you can even put limitations on the balances, so you have control of the account. And it's a great resource to leverage those first year or two that you're in business. Or if you've been in business for a while and never established any business or corporate credit, then what I recommend is you start again with the Fund and Grow for the first year or two, because regardless of where you are, that'll allow you transition into eventually getting corporate credit. And then at that point, like I said, you can refinance that and pay that off. And then the beauty of the corporate credit, as we mentioned before, you're now not financially responsible for that debt should the company go under or something like that. So you definitely want to check with a lawyer to get all the specific details in regards to that. But as it relates to corporate credit, because it's not personally guaranteed, and it's not tied directly to your personal credit, each contract is different. Each agreement is different. Each vendor agreement can be different. So you need to make sure you check all of that. But that's the purpose. And we used the example last time, Intel, here in the Valley just built $1 billion facility over the last couple of years here in Chandler, Arizona. And it's just a couple of miles away. I drive past it all the time. They didn't personally guarantee that building. Right. And that $1 billion worth of material and everything they have going on, they didn't personally, the corporation pays for that. Right. Now, any company can do that if they've established themselves correctly, if they have the right financial resources and they document their reports correctly and all that kind of stuff, and they establish relationships with the vendor or the lenders and banks and things like that. Any company can have that same type of clout, maybe not $1 billion worth, but they can have, tens of thousands, hundreds of thousands, even potentially millions of dollars, depending on how big the company is, in corporate credit to leverage to grow and scale their business the same way. And using the corporate entity as opposed to a personal entity, which is significantly different as it relates to personal obligation or responsibility for anything should the business have to go under.
Yeah, absolutely. Well, a lot of good information. Anything else, kind of insights you want to share about the differences before we talk about a few additional next steps for the audience?
Yeah, no, I think that pretty much covers the last thing I would just kind of say is that this is an education process as much as it's a solution. There's a process in understanding this, and it's not something to be taken lightly. I mean, you can listen to this video, get a couple of points about it. It's a little bit of insight, great. But at the end of the day, it's not going to answer all your questions. Yes, you can, by the way, you do not have to pay a company. We highly recommend using a company like Fund and Grow because they offer these resources that help you go out and do this. And they lead you through that process and provide you the insight you need to do that. But you could do it on your own. You absolutely could. And the information's out there if you look for it. The difference is when you do it on your own, you don't know the right questions to ask. And that can absolutely delay your ability to get the credit that you need when you need it. Right. And so that's why we partner with Fund and Grow. I've personally used them for previous companies. I have clients that I've highly recommended it to, and they're excited about the returns that they've gotten. Perfect example is, when I first did it, I paid a one-time flat fee, and that one-time flat fee, they were able to get me 4 different business credit accounts that actually were over $60,000 in credit. Again, business credit, right? And then I was able to leverage that. And within 8 months of that business that I had, I was able to generate over $1 million in borrowing for that particular business. Whether it was truck leases or truck purchases or fuel agreements or whatever the case may be. But it started with that relationship with Fund and Grow to help me kind of leverage that up to, and how we were able to grow the business. And I have other clients doing the same thing. So something we highly recommend and think is a great resource. It's that bridge between where you are now and where you want to get to.
Yeah. Awesome. But again, if you're interested in learning more, definitely scan that QR code. We'll also link it in the show notes so you can click there. But yeah, learn more about Fund and Grow. And then also, if you're watching this and maybe you're a business coach and this is kind of an area that you're less familiar with and you want to learn more about how you can help your clients build their business credit, we would encourage you to scan this QR code or head to mybizcoaches.co/coach. And it's just a great opportunity to learn more about MyBiz Coaches, how they work with business coaches and professionals that serve businesses. And they have all these partnerships like Fund and Grow that are available that you can add to your coaching lineup, or maybe consider, joining forces with MyBiz Coaches and becoming a coach with them as well. And then last but not least, if you're a small business owner and you happen to stumble upon this video in the channel, first of all, welcome. But if you want to learn more about how to build your business credit, I'm sure Eric would love to chat with you. You can scan this QR code, book a free consultation, and Eric, with his partnership with Jay Galt and others, can help steer you in the right direction. So thanks again for watching. And Eric, as always, appreciate the knowledge and insights today.
Thanks, David. Appreciate it.